Hey guys, it's Hannah and this is the weekly market wrap-up. I want to remind you that you can email me at hannah@viralnetworkinc.com to give me your opinions about what's going on in the market. I look forward to reading them, so don't forget to email me. This week, global markets have been under pressure as speculation of U.S. military involvement in Syria continues. And conventional drivers are still weighing heavy on investor sentiment, such as Fed tapering rumors. U.S. equity markets posted a slight recovery following a huge sell-off earlier in the week, as tensions in the Middle East came to a critical boiling point. The specter of U.S. military intervention in Syria knocked the Dow Jones off its key psychological support level of 15,000 points on Monday, while the benchmark S&P 500 also took heavy losses, with both indices now trading below their 50-day moving average. This is a key technical marker that all professional traders will have their eyes on. Thursday's price action bucked the downward trend as most recent reports indicated that the U.S. economy grew at a 2.5% annual rate from April through to June. This is a much faster than previously estimated due to higher exports and declining imports. The Labor Department also indicated that those seeking unemployment benefits last week fell to 331,000. This is the lowest in 5 years, so we are very happy to report that. Let's turn now to currencies and see how global tensions muted global currency action this week. The U.S. dollar index traded in a very tight consolidation pattern as a potential military strike against Syria kept a tight lid on the greenback. With today's better-than-expected economic data, however, the dollar shot past the consolidation and began challenging the 82 level, so not too bad. Things got a little bit more exciting for the dollar-yen pair this week. The stronger dollar applied pressure on the yen as well as the Japanese market, which pulled back amidst global tension and the fear of tapering. However, the pair ended up making a small recovery later in the week and is back above 98. The euro-dollar was also in a tight consolidation pattern for much of this week, but the release of positive U.S. economic data drove the pair down off the 133 level, with the current posture looking technically bearish. Now it's time for winners and losers and our picks for this week. The winner for this week is Vodafone, ticker symbol VOD. Share prices jumped up 8% this week. According to the Wall Street Journal, this UK-based telecommunications company is in talks with Verizon about possibly selling its 45% stake in Verizon Wireless, which would be an impact of more than $100 billion. Vodafone saw a 600% increase in volume as share prices on an adjusted basis hit a 12-year high. While shares conventionally appeared overheated, the price action has stabilized over the past few months, and it is not far off to say that we could see higher moves from here. Now, I hate to do it, but we gotta cover the loser, which is NovaGold, or ticker symbol NG. Despite a robust recovery in the underlying precious metal spot market, NovaGold shares plummeted over 12% for the week. This was mostly due to rising concerns regarding excessive costs for a key mining project within the company. This sharp loss is in direct contrast to the gains made in the gold market itself, which emphasizes the risk associated with investing in the miner sector right now. So something to look out for. Well, those are our winners and losers for this week. Now we want to know what you think. You tell us in the comments below what company you think was the top pick and what company just didn't make the cut this week. Finally, let's finish up with precious metals. The bullion market continued to move upward this week, although fears regarding Syria did not end up being a huge catalyst, as bullishness was rather muted. Thursday's price action saw gold give up about 0.5% of valuation against the prior session, while silver was barely clinging to the $24 level. Still, the overall posture is bullish, and we could be challenging the 50-day moving average soon. This means $1,500 for gold and $26 for silver. Yes! Palladium took a bit of a breather this week as global pressures weighed in on this market. It is finding a support level around $740, and the long-term trend still indicates that palladium is the frontrunner of the metals complex, even despite this week's lackluster move. And that wraps it up. Once again, thank you so much for your continued support of the weekly market wrap-ups. We very much appreciate it. Before you leave, make sure to like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel. For VNN, I'm Hannah Bernard.